Good morning, traders. TGIF. Today is Friday, June 24th. My name is Charles, and this is the Pirate Traders live stream. I'm not going to lie, guys. Coming into the morning this morning, pretty freaking bullish. And I'm going to tell you why. So what we've had going on over the last few weeks in the market, in particular over the last few days, is what we call balance. This was a big move of excess that brought us down here. We spent some time balancing, had another move lower, but then instantly started balancing again. So normally balance leads to excess, but that didn't happen. Balance just led to more balance. Once again, we got to push higher. And what did it lead to? Another 3-day balance inside the previous balance. Balance on balance on balance. Massey. So that's a lot of balance. Right? That's a lot of time for the market to spend grinding around in a tight range, trying to figure out where it wants to go and what it wants to do. But the cool thing about balance is balance leads to excess. We might trade around in a tight range for however long we need to, but at some point we break out of that range. And we often get what we call excess in the direction of the breakout. So let's just zoom up here a little bit and look at this balance area here. You could see we spent a long time bouncing around inside this range. But when we finally broke out, look at the excess. Look at the move to the downside. Right? Giant move down. That is what we are setting ourselves up for right now if we break out of this balance to the upside. Now, it's hard to call what is the balance area high. Was the area around yesterday's high the balance area high? Or is it up in here, pretty much where we are now? Tough to say. But we are opening with a gap up this morning, which is bullish. It's also a very large gap. Very large gaps have a harder time filling the first day. So it increases the odds that you're going to get a gap and go. A gap and go is the most bullish scenario that you could start out a day with. So the main area I'm watching here at the open is this area right here in the overnight between about 25 and 31. And this area is where they spent most of the time and brought in most of the volume in the overnight. So if we break back through that, we can expect them to try to fill the gap because a lot of those traders who went long up in here to hold the market up here. So if you start to pull below that node, you're likely to get a little pop. So then we see, can they fill the gap? But if this area can act as support, if the market pulls back down into there right now and the buyers step in and we start to get continuation from there, that would be extremely bullish for continuation to the upside. And both indices have a gap above, very large gap, that's in need of filling. So for the ES, that would target heading up to 38.95, 38.97 actually. So yeah, if we can find support in this gap, if we can pull back but not all the way to yesterday's high and find support, I am going to be very bullish for continuation to the upside. If we pull down to yesterday's high and we find support there, that is also a gap and go. So still bullish, but not quite as bullish. And only if we pull back down into yesterday's range, only if we pull back down below 38.06 will I start looking for a pullback to repair some of the weakness below. But all in all, pretty bullish this morning. Break out of balance, gap and go. That is often the setup for a trend day to the upside. Okay, we're now testing the high that was the bottom of the gap. So we would expect to see some FOMO buyers start to step in here, looking to fill the gap. Once they run out, we should be able to pull back down towards this overnight high and test the support once again. So again, overnight inventory was completely net long. Look at the ticks. They're still above 1,000. So we have not had a chance to absorb that overnight inventory yet. Those traders have not taken profits. All right, well, I'm bullish on the gap and go. We got new buyers stepping in here. So I'm bullish as long as we stay above the opening price. Right here at 38.32. I wouldn't be surprised if we need to pull back down looking for support in here. But if that opening price breaks and we start to head lower and fill the gap again, I will get neutral for the gap fill. But as I said, this is how they do it. They gap and go, and then they start the momentum higher, and they just never give you a chance to get in. They buy every little dip, and that's what they're doing. So this is bullish. All right, so as we run out of FOMO buyers up here, gap fill buyers, we should get a pullback into some support. We got half back at 38.39 as potential support, and then the overnight high. Okay, halfback broke, looking for support at the overnight high. 34.50. All right, we're getting some support now. Looking to push back up into that gap. So it's not like we're going to head there in a straight line, but the target for the gap fill is 38.97. That is where the market is likely to go today. The market often moves straight from one large node to the next pretty quick within a few days. So breaking away from this node yesterday has brought in some momentum to head up towards that one, which is right where that gap fill is. Increasing the probabilities in my mind that that's where we're going. Let's step back and take a look at it on the daily. So we can clearly see this has been some form of balance here. I was drawing it yesterday almost kind of like this. Could be the potential type of balance. So this would be a breakout of that. And if you saw it as horizontal balance, we may have not quite broken out of it yet, but be about to. So the gap fill would take us to right here. And we still have a long way to go before we meet up with that larger downtrend that's been going on in the bear market. Which is bullish. Let's pop over and take a quick look at the Q. So same exact thing. Man, the Q almost looks more like it's like creating a channel up, more so than breaking out of balance. But you got the same thing, gap up in the overnight. Very little counter auction. Immediately trading higher. Building up support at a higher price. Oh man, I didn't even realize the Q opened through its gap. So it did what the ES did the other day. It gapped up through a gap down. That's so strange. All right, well, that's weak. So at some point, we're going to need to come back and backfill this. But right now, obviously, the momentum is bullish. Gap on top of a gap. So you got a trending market right now, volume-wise, building a node of volume, pushing higher, building a node of volume, pushing higher, building a node of volume. So that is bullish. Same thing as the ES, your volume profile over here on the left, you're not in the same position. You're at a major support resistance right now. So there's a chance the Q could get some chop here. But if it's able to break through, that next gap above becomes the target, as it'll move from this major node to this one. So let's see if they can keep this momentum going on the Q. If so, very, very bullish. They've got some ground to cover. Asterix, new news in 14 minutes can affect the trend. Yes, of course. Anything at any time can cause a change in the market, good or bad. So once again, we pushed the market higher. We're now building support at a higher price. That is often a sign of a trend. Electric Mammoth. Yeah, I'll check the email. I'll get back to you. Gotta love being in a gap. Very little resistance here. Plenty of FOMO and no one to fight it. Daniel, am I trailing my stops? I am in a long right now, and I did just trail it and pull it up to 38.48. Normally, I wouldn't, though. Normally, on a trend day, I would just leave my stop where it is until we begin one time framing, and then I'd start trailing it. But right now, I'm just kind of keeping my my stops below that support and then looking to re-enter. So if this support breaks, I'll get back in on this one until we start to one time frame. Jeremy, I assume this is a joke since you ended it with a laugh out loud, but he says, if I have FOMO on price coming back down, should I short this market? Laugh out loud. So I, again, assume you're kidding with the laugh out loud, but no. Freaking no. Yeah, no, you never want to try to short against momentum, even if the market needs a pullback. Let it have its pullback and then get in long. Get in with the direction of the momentum. That's always the way to play it. Peter, this territory is totally empty of sellers as the move to the downside, and later on upside is characterized of emotional imbalance. I think there's a lack of sellers today because we spent so much time rotating, right? That's the idea of balance leading to excess, is like the sellers have had 2 weeks to try to take the market lower and they couldn't. So when they saw that massive gap up this morning, they just finally decided to give up. They decided to stop trying to fight the momentum. But I suppose that is emotional. The Shah, it's pretty crazy how obsessed people can get with trying to find and short the top or catch the knife. It is. It's funny how that's what human instinct is, right? Like there's people who, from the moment the market opened this morning, okay, they saw the gap below and were like, oh, we have to fill the gap. They've been saying that to themselves all morning. We have to fill the gap. And every time it's pushed up, they've been selling. And then it's pushed up again, and they're like, ooh, it's an even better entry. That's what they're saying to themselves. I'm getting an even better entry on my short, and they're shorting again. And it's pushing up again, and oh, well, yeah, better entry, and they're shorting again. It's so funny to me how people's instinct is to go against whatever the momentum is. All right, so we got terrible taper at the high, increasing the odds that we need to head back up there and get a little more two-sided trade. But we seem to be running out of steam, so we may need to pull back into support at 38.51 to bring in those buyers. Giles, do you hold through the news? Yeah. I hold as long as the market keeps trending. Could be good news. Could push the market higher. Jeremy Jones, where are you in at? As soon as I start talking about a trade, people want to know the specifics. In at 39, stop at 48. Monitoring for continuation higher. Well, apparently the news was good. Apparently the bots like it. All right, well, this I'm going to trail because this will have to pull back. So it looks like Michigan sentiment just wasn't bad, and home sales was a little better than expected. If you are in a long, I'd go ahead and trail that stop up below this node at 69 here, because this is very thin volume, and will likely the market will need at some point to pull back down and backfill that. But obviously we want to ride this, let it run as far as we can. The gap fill up at 97 is still the target. Even with the help of the news bots. Anytime you see a level that has less than 200 contracts, that should jump out at you. That at some point, the market will need to come back and backfill that. Okay, another one now. Here at 75, 28 contracts. Needs backfilling. Trailing my stop. Sean, What can make me stick to my stops and not add to losing trades? Making a rule that you stick to your stops and you don't add to losing trades. So the way you become successful as a trader in general. All right, here we go. Getting a pullback to backfill that first low volume node right here at 75. Could bring in some support there for continuation. If not, support around 69. The way you basically fix all your problems as a trader is that you have to create a rule. And the rule is just for you. It's based on your own psychology, your own experience, your own account size. And you figure out what are the problems that you deal with. So if a problem that you have is that you move your stops, right? You enter a trade and you think, I'm going to get long here and I'll stop out here. But then when the market starts to pull back, you go, oh no, I'm going to move my stop down. I'll move it down to here because it'll be okay, right? Well, then you need to create a rule that says I do not move my stops. That's a rule that from now on for the rest of your life, every trade you ever take, you do not move your stops, period. That's a new rule for you, is that you don't move your stops. So then the rule for not adding to losers is as simple as that. When I get in a trade and the trade goes against me, I stay in until my stop fills, but I do not add to a losing trade. And then you just force yourself to follow that rule for the rest of your life. You never add to another losing trade. And then it just becomes what the skill really is just the skill of being disciplined to follow your rules. And that's just regular old discipline. So there's two ways that you can work on your discipline. One is a system of, a carrot and a stick, a reward and a punishment. So for example, if you break one of your rules, you have a punishment for yourself. Maybe you drop and do 10 push-ups right then and there, right? If you follow your rules, if you feel the need to FOMO, but you don't FOMO, if you feel the need to add to a loser, but you decide not to because you don't want to break your rule, you give yourself a little treat. You have a little piece of candy or something. So that's one way, just in general, to be more disciplined. Punish yourself when you do something wrong. Reward yourself when you do something right. And then, of course, the other way is habit. And habit is the most powerful way. You just develop a habit. For me, what works really good is literally saying things out loud. I mean, you guys who listen to the live stream every day, you know this. I have like phrases that I repeat over and over that I say every single time. The reason I do that is because I develop them as a way to remind myself. So, for example, if the C period printed and it came up exactly to the B period high, and then it turned around and started to go back down, I would literally say out loud to myself, the market just created a poor high, so this is just a push away from the poor high, looking for support to come back and repair it. And by creating the habit, because I used to always want to short that. As soon as I would see that momentum stopping to the upside, I wanted to go short. So by creating the habit of always reminding myself of that every time, the market just created a poor high. That increases the odds this is a push away, looking for support to come back and repair. And by every time I see it, I think that thought, it has just developed the habit of being patient and waiting for the support and then buying that for the repair, which is the higher probability trade than going short. So you can either use, rewards and punishments to develop discipline, or just habit. You just do it the same way over and over and over so much that you just do it without thinking. But that's how you kind of overcome your personal struggles with trading. And it really is that simple. Just ask yourself what mistakes you're making and then come up with a rule to fix that mistake. And if that rule doesn't fix it, adjust the rule. Try it this way or try it that way. All right, new buyers. FOMO buyers, they will probably take profits at that gap fill. So look for a pullback once we get there. Mathis, what did you base your long entry on? Gap and go. Right? Market traded higher in the overnight and then didn't pull back in the regular trading hours. And when those ticks, if you remember, the ticks came down, I think they came down to like, actually right where the low is. Yeah, they came down to here. They almost got to the zero line and then they bounced all the way back up to 1,000. It was like, boop, boop. They popped up and I was like, going long. It's a gap and go. When you know, you know. You know? Johnny Be Good, do you put your stop behind a node? Yes. So the way I trail stops is, so if I got in down here, I'd put it under this node, then 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 put it, you know what I mean? And just follow it, because if it's going to pull back down, it'll likely find support in there and continue higher. And if it were to get stopped out, I could just put my buy order in at the next major node to get back in again. John Lash saying, Sean, also don't trade with too many contracts. When I started, I was using the minis, but then I realized that they were too big and I moved down to the micros. That allowed me to hold trades for longer. Yeah, I mean, that's what it ultimately comes down to. If you're moving your stops or you're adding to losers, it just means that you have issues with the confidence in the trade. So you just always want to use a position size in any trade that matches your confidence. So if you're not confident that your trade's going to work out, get in with a small enough position size that you won't care if it doesn't work. And if you are confident, that's when you have to have the courage to put in a little bit bigger size. Take advantage of those opportunities where you have confidence. Design knob Tom Dante always adds to losers. I think that's exactly wrong, right? Elliot, another thing when you're first learning is that not every rule has to be profit maximizing. I just did a few weeks on a sim where I couldn't move either my stop or my take profit, and it helps a lot. Yeah, that's another thing that I do or used to do when I was developing my strategy. That's a huge help, is like only focus on one thing at a time. So like if right now you want to focus on not moving your stops or not adding to losers, literally just focus on that for a few weeks. And don't worry about trying to let your trades, run as far as they possibly can, or worry about, getting in with the biggest size you possibly can, or worry about this or that or the other. Like, just focus on your stops. Get that piece of the puzzle fixed, then move on to the next thing one at a time. That really helps. And of course, that's what paper trading is for, experimenting. Xavier, you have told us not to trade the open, to wait, but today the signals were clear for the long, in which case you went. Awesome. Yeah, I've talked about that before. Anytime there's a gap, I'm almost always trading first thing. Always, because you're 100% of the time when you have a gap, you're either going to fill the gap, so there's a trade to do that, or you're going to fail to fill the gap, which is a sign of a gap and go, momentum in the opposite direction. So today it was a gap up. There was only two options. When the market opened right here, we were either going to head back down and fill the gap, or the momentum was going to take us higher. So no reason to sit around and wait for a trade in a gap, right? Now, yesterday, when we opened inside the previous day's range, well, then I had no clue what the market was going to do. So sure, let it grind around for a few hours and give me a better insight. But on a day where there's a gap, the opportunity is literally right from the open. And so you want to be looking with your finger on the trigger right from the open. Especially because of days like today. I've seen so many days like today where you gap and go and you never come back down again. Like, it just goes all day long and then rotates at higher prices somewhere. So if you don't get in right at the beginning, you miss your chance to ride that sucker all the way up. So that's why it's important to understand at the open, are we opening inside the previous day's range or not? What is the perfect ratio of loss to reward? Do you mean risk to reward? I mean, as asymmetric as you can make it is the goal. So the minimal risk with the maximal possible reward. So like, let's say, for example, we were to print the C period in about 15 minutes, and the market were to pull all the way back down to the B period low. Actually, sorry, let me say it poked up first. We started one time framing higher, then it pulled down to the B period low. Okay? You could get in a trade right there at the B period low, risking 1 point. One single point of risk, because you got your stop 2 ticks below that B period low. Get in that trade. If the trend continues, the market could trade all the way back up to fill the gap. So you would be risking 1 point to make like 50 points. So that's a 1 to 50 risk to reward ratio. That's pretty freaking good. However, those sort of asymmetric opportunities are very rare. So you want to always take advantage of them when they present themselves, but you can't limit yourself to only trading, that kind of opportunity, because they just don't happen often. Alex says, one MES contract is scary for me. One MES contract is scary for me. Well, then you have to downsize, my friend. You have to trade the ETF. At least until you get more comfortable taking on risk. Sean, do I have a target for a trade or just a stop? I always have a target. I don't always make it to the target. Sometimes I'll trail my stops and I'll get stopped out before I get there. But yeah, I always have a target, and it's different on every trade. Today, it's the fill of the gap up at 97. But yeah, always when I enter a trade, I have a target for profits and a stop. And the only time I will move the stop is if I'm in the profits. So I'm moving it above my entry. Let's take a look at the NQ. Man, so they're about, it looks like they want to go fill that gap above as well. Like I said, once they broke through this node, the target for the next day or two is to head up to that node. So pretty bullish. Look for some resistance around the 12,100 level. Right in here. But if you break through that, you're back up in the gap. And then the gap fill up to 12,300 is the target. You also have a low volume node, less than 100 contracts. So it wouldn't hurt to get a bit of a pullback here, looking for support. But it's bullish. Chirp, I think I heard Dalton say a gap day, it's a 65% fill, 35% move away. I don't think that's accurate. It might be, but I think it fills more often than that. Who knows? Falcon 1, how many contracts do you trade? I trade my position size based on my risk, so it's different in every trade. Trades where I have a large amount of risk, meaning my stop is really far away from my entry, I'll trade like 5 MES contracts. And if it's a trade with a tighter stop, I'll trade like 3 ES contracts. That's my like general range. OM says discipline and emotions. To me, the most difficult part of trading. OM, brother, to you and everyone else. That is what is hard about trading, is the discipline and the emotions. Learning to read charts is easy. Anyone can do that. It's the being disciplined in the moment. It's the at that moment you want to go long, you feel the FOMO, being able to remind yourself not to remind yourself you have a rule that you wait for a pullback and you buy support, whatever. That's the skill of trading. Is the skill of being disciplined in following your rules. Sean, been listening to Mark Douglas? Yeah, I love Mark Douglas. Highly recommend. Thinking in the Zone. Daniel, what is the new support? 3881? Correct. Right now, that's the node that's holding. It does feel like they're running out of steam, though. And we do have awfully thin volume below. So a little pullback for support would be perfectly natural. Cortman, can I show you the gap on the Q? I'll do it just for you. Shooby-dooby-doo. So it's right here from the low on the 9th to the high on the 10th. From 12,120 to 12,290. Sorry, 12,300. And then, of course, there's a gap below as well now, too. We left behind from today. OM, if you want it to go up at 81, just let me know. I'll sell there, and then the market will go up. Yeah, please do. Go short, brother. Help us out. Anita, correct. Yeah, half a point per TPO. All right. Well, now that we've printed the C period, we've left behind a set of single prints down here to 38.5950. So that increases the odds. The market will need to pull back down to backfill those single prints, and we will look for support there at the base. If the C period is able to trade its way above the B period high, so if it can get above 38.90, the market will be one time framing higher, which of course is bullish. And then we can just monitor for continuation as long as they keep the trend intact. I really do feel like we need to pull back though and backfill some of this thin volume and single prints here. But I remain pretty bullish. It's a gap and go. And I'm pretty confident in this target up here at 97 as getting tested at some point today. But whether we go straight there or we got to come down first and find support, I do not know. With that, I shall bid you all farewell, au revoir, and wish you the best. If you're not doing anything this weekend, if you're just kind of laying low, hanging out, keeping it chill, maybe try taking the e-course this weekend. If you head to the website, there's also a link in the description. You'll see that I have a market profile e-course that I created. It's 14 videos. It takes about 4.5 hours to watch. It's not something you would want to watch one time and be done. It's something you'd watch over and over again until the concepts really sink in. But it will help you understand all the stuff I'm talking about. So if you're coming here every day and you're listening to me talk about all this market profile references and you're seeing that they work out, you're like, you know, when he says it's going to do this or that, it does it. But I don't understand like what he's talking about. I don't get when he says we've got single prints that need to backfill and we'll look for support at the base of the single prints. What the heck does he mean? Why do they need to backfill? Why will we find support there? What's a single print? If this is where you find yourself right now, I highly recommend taking that e-course. It's not a scam to make $100 off you. It is really designed to make it easier for you to understand the market and how it moves and give you better insights to build your own strategies around. So give that one some consideration. And of course, as always, join the brigade. Damn it, it's only $10. We'd love to have you. All right, have a great weekend, everyone, and I will see you on Monday.